What is good, guy? Welcome in this new video. Today we are talking about fair value gaps. Okay, but not just simple fair value gap that you watch TJR bootcamp or whatever. No, we are going into a more in-depth explanation to my ear sucked today, fuck. Okay, we are going to do a more in-depth explanation with all the types of entry you can get out with only fair value gap and of course inversion fair gap. If you don't know what them are, I'm gonna explain everything to you. Okay, let's start from the very basics. Okay, what a fair value gap is basically, I'm gonna do just an example on the charts. Okay, that's a fair value gap. Why is that a fair value gap? Because we got it's a 3-candle pattern. Okay, we got the first candle here, the week. This is the week. We mark out the week of the first candle, the week of the third candle, and as you can see here we have a void of week. Okay, and that's the fair value gap. Basically, if the week, this week was like this wasn't a fair value gap. Okay, same thing if the week was here. Okay, of maybe if the week was like this, let me do this shit. Okay, sorry. See, we don't have the void here. Another example on the bearish side, here, that's a big ass void. Okay, we take the first week and the second week of the week of the third candle. Okay, that's our fair value gap. That's basically a zone where price should support to continue the direction that the trend is going into. Okay, very easy as that. What an inversion fair value gap is, it's just a fair value gap that got invalidated. In this case, this was our fair value gap. As you can see here, the price closed, a candle closed below the fair value gap. So here, as you can see, the price went below it, but these three aren't invalidation. For me, I will explain it. An invalidation is just when we see a candle closure below it. Okay, very easy as that. That's the inverse fair value gap. Same thing on the other side. So here we add this one, candle closure. Fuck, I'm gonna do just this. Okay, we got the candle closure above. See, we close, sorry, no, what am I saying? Okay, see, we closed here. That is our invalidation, so that's an inversion fair value gap. Very easy. How it's useful for us, an inversion fair value gap? For two main reasons. Okay, as a confluence, when we trade like my style, so with precision, it could be an additional confluence for entries, or for example for normal strategy. When we see this, it's basically that the trend is going to reverse. We can use it as confirmation. Basically, we just swept, for example, this low. Okay, our bearish fair value, sorry, no, we swept this one, this low here, so like this. This is our sweep. We see we have this inversion fair gap here. For confirmation, we don't want to enter just here. Okay, with only the sweep. Okay, we see this fair value gap, it get invalidated on this closure. We could enter on the retest or directly on the closure. Okay, and that's great. this is actually a very good inverse fair gap. I just found it randomly, but it gets very to my point. And yeah, that's the first thing that I explained to you. It's useful for our type of style of trading, so for entries. In this case, as you can see, after it get retested, and then continued to rally. Then we got, of course, the daily stop. So yeah, this gap is for that, but whatever. This is a great example. Now what? Let's talk specifically about the fair value gap itself. We got, as you can see, the 50% mark, so the C, which stands for consequent encroachment. A big word to just say that it's the 50% mark, and it's a very sensitive area, okay? The main sensitive area of a value gap are the 50%. And here, in this case, let's pretend that this was, let's pretend that this was a bullish fair value gap, okay? So let's just do an example live. This was our fair value gap, okay? Our sensitive area are the 50% mark, the 50% mark, so this one. And in this case, it's a gap, it's a bullish gap, so here. Why is that? Because that's called gap fill, okay? And in case it was a bearish gap, so yeah, this one. This is a bearish gap. That's our, of course, C, so the 50%, and that's our gap fill, okay? On the bearish, on the bullish is on the low side, and on the bearish is on the high. Why these are very important area of the fair value gap? That's not really a specific, so yeah, there is a specific information, but that's completely useless to know. I'm just gonna tell you that these are our two main area, and why we use specifically these two, and for example not the 25% 15% mark, so like this, because for precision entry, so that's only for our strategy of trading. That's very important. We need very precise and sniper entry, and these are the most sensitive, okay, of the fair value gap. The 50% mark, it's very good to see big fucking retest, so like the like here we saw here the start got almost filled, this gap got almost filled, so we almost touched the final one, but yeah, we touched the 50% mark, okay? In this case, we either gonna enter on this or on this. How we do we choose? We choose with basically other confluence, okay? If we got a changing state of delivery, if we got another fair value gap aligned, a weak C, whatever, okay? Just align more concept that you can in the same level and choose the best out of the two entry of the fair value gap, okay? So that's very easy. We do see this happens a lot of time, and yeah, okay. Talking about the inverse fair value gap, for the example here, it's not the same thing, okay? With the inversion favorable gap, we want only the 50% mark, okay? Because that's not a real gap, that's an inversion favorable gap. So a gap that got invalidated, okay? In this case, we just want the 50% mark. Don't consider the gap fill, okay? 50% mark, boom, big rejection, okay? The gap fill in particular is cool and useful to combine with order block, so change state of delivery. Yeah, that one basically, it's very good. Otherwise, almost very often I use just the 50% mark. That's the best. This was a very easy one today. Very easy concept, but that's very useful. Just look at how often this shit happens, bro. That's a bearish gap. Okay, tapped at 1, got how many points? I don't know. Got tapped at 2, boom. Okay, let's do an example of a gap fill. Why? Okay, I'm gonna explain also to you why the reason of the gap fill, why is it so good? Because let's do like this, okay? It's very good. Let's pretend our candle here was like this, the closure, okay? This was our candle, in this case bearish, sorry, our bearish candle. Fuck, but why this shit? Okay, this was our bearish candle that closed like this, okay? And the wick was like this, or maybe, yeah, no, like this is good, okay? That's a good gap fill. Why is that? And why do we think that's very useful? That's because that's because of the inversion favorable gap concept, okay? If this candle closed like this would have been considered like an inversion. So we would have wanted the price to continue to go lower, okay? But since the gap stayed precisely into the gap, that's a very high probability chance that the gap got respected oppositely, and now we want to see a strong rejection, okay? I have a friend that just started trading, and he only trade with TGR strat, so very simple concept such as the favorable gap. We saw the other day this perfect example. We were on the higher time frame and we saw a big fucking favorable gap, bearish one. We saw a strong momentum to the upside, so a candle like this. We closed like that, okay? The wick was like this, okay? This was the wick. Fuck, bro. So once you see this, it's basically not 100%. I'm not gonna sit here pretend that everything is 100%, of course, but that's very high probability that this will fucking reverse from here, okay? Also, we saw on the other we waited actually for the second candle. The second candle was bearish, okay? Respected it. Also the wick like this, maybe. What do? We wait for the retest. So we do this candle, the next one do this, we enter on the start. No, sorry, we enter, what am I saying? we could enter here, here. Let's do that there is CSD. We got an CSD that in this case is aligned perfectly with the fair value gap C perfectly. We do like this, boom. Okay, this could be a model itself. Fair value inverse and fair value gap on their own are very useful for to add to your strategy because you can find them everywhere, and could be just itself, maybe with a changing set of delivery, just itself a strategy, a model that they work very well, very well. In this case, for example, just the last one, fair value gap. Is this an invalidation? No, because we didn't close below the fair value gap, okay? That was maybe a gap fill, okay? On the lower time frame, for example. What else? I wanted to do an inversion. Another inversion fair value gap in example. Let's do on the 15 minute because of course, as all the concepts that I explained, they work on every time frame. And in every video, of course, I explain to you which are the best time frame for each concept, because yes, there is a best time frame for every concept, for every model, okay? They work on every one, but there are some best one, okay? Here, for example, that's a good inversion fair value gap. Why? It got respected tons of time. Look at this shit here. Inversed here. So see, we closed above. Got respected here tons of time. Closed above, so now it's an inversion fair value gap. What do we see? Look at this, bro. The candle rejected after, tapped it perfectly into the C. Just perfectly, okay? Totally random. I just watched that the first good one that I found, okay? The first one. Look at this, bro. That's crazy. It was at 0.1 tick. 175 stop loss, okay? Yeah, inversion fair value gap are really crazy. I use them a lot. Also here, second entry. 2 fucking entry, okay? That's all for today, guys. If you have any question about them, just ask in the comment, or otherwise enter the free Discord that I have in bio. Thanks for watching. Peace out.